great day so far at FTT Lending 3.0 and Future Identity Finance. Lots of interesting conversations going on, lots to talk about. So I'm delighted that Andrei Gaman, Commercial Vice President at FintechOS, has taken some time out to speak to me. Thank you.
Thank you for the opportunity. It's an honor.
So I'd love to just say it's great to have FintechOS with us here at FTT Lending 3.0 this year. And can you share a little bit about you, your role, what you're up to?
Sure, absolutely. So as you mentioned, my name is Andrei Gaman. I'm with the company for 4 years now. I've been working in technology for all my life, all my professional life. I'm really passionate about working with businesses in different segments to really understand how technology can help them bring a competitive edge and how technology can help them realize their full potential and get them to growth. And that's why with FintechOS we decided to focus on the financial services industry, right? Because I think there is such a huge opportunity for financial services companies to really differentiate in front of their customers. I was on a panel this morning on SME lending, and I was quoting a survey by Accenture that only 15% of the SMEs are really happy with the way they do banking with their bank. So I think there is a huge opportunity for product differentiation and for personalization and automation across the entire range of products that banks put forward to their customers. With FintechOS, we are a fintech enablement platform. So we work with banks of all sizes to help them build financial products, launch them into the market at pace. So that means really fast, in weeks rather than months, and then manage all those financial products, loans, deposits, current accounts once they are issued for their customers, right, throughout the life cycle of their products. And we work with the big boys. We work with the Société Générale of the world, and we work with SocGen in France and across other territories like Italy or Germany. We work with Admiral here in the UK, one of the large insurance companies. We work with specialist lenders as well. We have a strong partnership with an Irish mortgage lender called Avant Money, part of Bank Inter Group. But we also work with smaller companies, and you will hear in the next few months a nice story around a company here in the UK that is looking at commoditizing access to solar energy for everyone. I'm not going to say more than that.
So no big reveal today.
No big reveal today, just yet, but they are powered by FintechOS, which is really exciting.
Ooh, that is exciting. So picking up on some of the things you mentioned, that fast pace of change, that need really to do better. You know, you mentioned the relatively low number of SMEs that are happy with their provider, and really providing those personalized products at scale and speed. What are some of the key trends that you're seeing in the fintech sector, kind of bearing in mind all of those pressures? You know, what should we be looking out for?
There is a lot of talk now in the market around customer centricity and moving away from products to customers and having the customer in the center of the attention rather than the product. McKinsey was researching the market a couple of years back, and we've seen some interesting results coming out of those surveys, where we have seen that time to money and time to cash, time to yes and time to money for customers, especially smaller companies, is very long, much longer than their business need is, right? If you look at a small company, a small business, they would want to get access to money fast to pay their salaries or buy a piece of equipment that they need today, not tomorrow, not in 3 months, not in 5 months, which is what McKinsey survey is revealing. So there is a big rise of propositions that are customer-centric and customer-oriented. The problem we see, and the biggest trend we see right now, is that banks and credit institutions in general have a choice they need to make between two options. One is to modernize their core systems so they can provide that service to their customers, while the other one is to continue innovating on their product stacks, on their financial product stack. The problem is, as it stands today, it's very difficult for them to do both. Because if you look at the reasons why banks need to modernize their IT landscape, is because of the things that we just discussed about. Personalization of service, the whole piece around automation, the whole array of data sets that are available for underwriting purposes, looking at risk in a differentiated way in internal data sources that the bank owns, but also outside of the data sources that a bank uses in a normal day-to-day life. So the existing core systems, sometimes for large incumbent banks, make it very difficult for them to make use of all of that information so they can provide a proposition for their customers that is relevant for them. Combine that with the fact that they can't really put those propositions into the market fast. They can't really see how those customers' propositions land with those customers and adjust. It makes it very complicated for them to drive innovation while in the same time they modernize and rebuild their technology state. Now, traditionally banks had to choose between three options, right? One was they would just replace the existing system. That was the silver bullet, the universal solution. Replace it and put in something new. Well, it takes a long time and a lot of skill and cost and money that you need to invest in that. The other option was build something on the side. That was perfectly fine. It was fine for the new customers that you would onboard with that neobank that you would build on the side. A greenfield approach is fine for the customers that will actually be ending up using it. But then you end up running two systems and 80% of your customers will be still on the old legacy tech while only 20% will be on the new one. And it creates a lot of overhead how to manage those. In more recent years, what we've seen also as a trend is the rise of some special point solutions and some special fintechs that offer a solution for KYC, AML, different relevant touch points across the customer journey. And banks have used them to fix some of those problems. But it's a tactical fix, because what you end up at the end of the day with is a very large ecosystem of applications that are not connected amongst themselves. So you need to build that interconnectivity, and you need to still keep your core system to support the core business, which is the ledger and the whole thing that happens after the financial product is being issued to the customer, right? So with the rise of these new fintech enablement platforms, which are essentially just think of it of an operating system that you just plug into your bank's ecosystem that provides you the ability to fast innovate and build those financial products, take out the whole pressure on the core system around the risk management, around the customer journey, around the automation. It provides a layer of data abstractization that you can use to integrate all different sources of data from within the bank systems and from outside, and also provides you a space where you can quickly innovate and iterate, put products into the market, build that continuous feedback loop with your customers, try, test, see if it lands well, adjust it, while you have obviously at the customer touch points, you would have observability across how those products are performing and how those customer journeys are actually landing with your customers. That's what we see as a big trend right now for large banks that in the past needed to either modernize their core or innovate on their products, to actually bring the two angles together, innovate and modernize their core in the same time, while using these fintech enablement platforms that have come available in the last few years.
That's so interesting, because it really takes away making those difficult strategic decisions, as you said, to do this way or that way, each
right.
which has its drawbacks.
That's right.
And focusing in on lending, I know you were talking about lending earlier. What are some of the innovations with regards to lending that really stand out for you? What should we be looking at?
I really like a lot the embedded lending concept. And it's not only embedded lending, it's embedded financial services. If you look at any company across the world, they can be a front-end channel for a financial company to distribute their financial products and propositions to the market. So I think the trend around embedded is very relevant, and the problem that currently banks have is make that proposition relevant for the moment of purchase for that customer. Because if you think of e-commerce shops, for example, those would be your go-to candidate for buy now, pay later, split payments, all these kind of things, extended warranty for your TV, or any other protection, life protection you might want to take on if something goes bad and you can't pay for that loan. They only care, those e-commerce shops, they only care about the customer experience. They want to get that customer from looking at a TV to buying that TV in no more than 3 clicks. The last thing they need is the complexity of a bank's underwriting process and the friction in a customer origination journey that would just throw away the whole concept of slick and easy to use. And that customer might end up not buying that TV at all. So the way forward in this scenario is the one that we mentioned before, right? Is the whole level of personalization that needs to be put forward by the banks, the systems that need to provide that slick and easy way for customers to access their services, and it needs to be headless. It needs to be able to run underneath any company front end that could service and could support them as a front end distribution channel. So of all the trends I'm seeing right now in lending, I think embedded is by far the more interesting one for everyone, because the opportunity is so large, as any company can be a distribution channel for any financial product.
Yeah, I mean, I think you pointed on something that is so fascinating in, that kind of contextual experience for the customer, but also that growing range of partners involved. Obviously, as you said, many of whom are not financial services
Absolutely.
providers. So definitely something to look out for. Thank you so much for taking the time to join us. That was really interesting, and I hope you enjoy the rest of the day.
Thank you so much. Looking forward to it.